nonetheless, good to be with you today. A topic which should be all very, very on the forefront of your minds at all times, and obviously one very close to my heart. We're going to look at a few sometimes simple but common trading mistakes, and obviously talk about how we can, how we can avoid them, how you can work. And don't get me wrong, it's not sometimes an overnight fix. It can be difficult, and you might feel sometimes it's easier said than done. But nonetheless, it is possible, and I'm going to try to help you with it today. As always, I encourage questions. So please shoot me your questions, and I'll do as best as I can to answer as many as possible. Again, I'm grateful each week our numbers grow on the webinar. So thank you very much for putting aside some time, even a few days before Christmas, before the holidays start. Even more appreciation for that. So like I said, the webinar topic today is trading mistakes, how to avoid them. I'll obviously round up at the end with a quick market recap, as I like to do. You may think that the holiday season's starting, but you would be sadly incorrect, because the next 2 days are laden with very important financial news from the UK, here in the UK, and in the US as well. So I'll get you prepared for that. And you'll see how this feeds in to one of the trading mistakes. So let's crack on, because there are quite a few mistakes that I look, no one's perfect. Even the best traders, the best fund managers in the world will always admit and hold their hand up to making mistakes. No one's perfect, so don't be too hard on yourself. But there are some things that you can immediately start to recognize in your trading, and start to try and implement in your strategy to help with that. The first thing, and something any of my particular clients on the line will know, that it's something I will never stop harping on about, is the risk management in your account. Taking too much risk, using too much leverage without even actually realizing it sometimes. And that ties in to the size of your account, obviously, and the size of the trades that you're putting on. Unfortunately, sometimes people have unrealistic expectations of how much they can make in their account. Now, although it's infinite how much you can make on any given day, if we talk about consistent achievable returns within the correct levels of risk. Now, some of you will have a higher threshold for risk than others, obviously, but nonetheless, over my years, the best managers for funds, hedge funds, you name it, the best traders I've seen are the ones that are trading a relatively small size of their portfolio. So if your portfolio is $100,000, yes, a lot size of one, which is 100,000 of currency, could still be less risk to you than someone who's got $500 in their account and is trading a lot size of 0.03 or 0.02. So it's all relative, and people don't think enough, unfortunately, about the risks they take. So you can see on the screen, my dashboard. Now, again, some of you might be unfamiliar with this view. We recently relaunched some parts of our website. The rollout is continuing, but the dashboard is a nice new introduction that you'll see. You can see my demo account has 50,000 euros in it, a nice healthy balance. But again, that doesn't mean even I, with 50,000 in my account, might end up taking too much risks, depending on the size of the positions, and how many you have open. Risk management is perhaps, well, definitely perhaps, the most critical point of being a successful trader. Because without it, one day soon your account will be in trouble. And you would have wondered why, and risk management is critical to that. Okay, so that very much ties into the lot sizes, the leverage you're using, which they all are a feature of each other, and this flows into sort of the money management as well. Often you would have got calls from myself or your fellow account manager saying, look, you don't have enough margin in your account. And again, that ties into the risks you're taking. If your account is approaching even levels towards the 200% margin level, it means you don't have enough of a buffer in the account. And trust me when I say, I've seen many times people have their trades stopped for no other reason. They had, let's say they had a position on euro US dollar. Okay, euro US dollar. Purely if we look someone at 1037 might have said, okay, now's a good time to buy the euro. I think it's quite weak. But we see if a couple of hours later it actually kept falling. And if there wasn't enough margin in the account, the trade might have got stopped. But their view at that time was still that they believed the euro was going to strengthen, even on the short term. So they've been stopped. And what that means is they've now not participated in this upturn. A nice, over 100 pip upturn. Purely because they didn't set aside enough capital, enough margin to be able to withstand that volatility. Because really that's what it does. It allows you to mitigate the volatility, to smooth the journey out. So you're actually taking on less risks overall in the account to participate in that same level of profit. So having risk management without money management and having money management without risk management, they go hand in hand. They really do. They go very much hand in hand. You can't have one without the other. The lot sizes you trade will dictate sometimes the margin level and vice versa. How much margin you have in your account, the money management aspect also can dictate the size you trade. Now, obviously, there will be opportunities. If we look just last week at the US dollar interest rate decision, now I and some of my traders, and I'm sure a lot of you on the line, decided to dial up your risk and perhaps trade more than you usually would, and that's fine. There are opportunities for great payoffs, and if you're protecting yourself on the downside as well, it's there to be done. Again, within the right levels of risk, but there are the opportunities to increase that level. So there's nothing to stop you do that, but you need to have the margin in the account to offer you that optionality, to offer you that flexibility. Because without it, you'll find yourself either getting stopped out or not having enough margin to put on a trade that you really wanted to put on because you had a certain view. Now, I've got a first question from a Jack on the line. Thanks for the question, Jack. Asking about stop losses and take profits. Well, he's literally taking the words out of my mouth, Jack. Stop losses, take profits are, again, hugely important parts of risk management. For those of you who are really unfamiliar, when you open a trade, usually you have the advanced settings, you have the SL and the take profit here. And what I want to stress that yes, putting on a stop loss, for example, is very much about levels of risk you can afford. So you should always go into a trade knowing that some of your capital is at risk and how much are you willing to lose on this trade for a certain period. But it's not just about an absolute value. It's also about starting to understand where you should be putting a stop loss based on the charts and based on the information you have. Support and resistance levels, things like that, moving averages, because they will give you nice indicators as to where a stop loss makes sense. So one trade you might lose $10, but you actually only wanted to lose $7 on the stop loss. So you would have set your stop loss at $7. Doesn't matter to you how many pips that is. You just know $7. But I might come along and say, hey, look at this chart. If we take this as an example, you might have put a stop loss. You might have, where are we? Bought euro, decided to put your stop loss on here. But at that time, now obviously the chart's moved since then, at that time actually the support line for the euro was maybe slightly lower. So we come along and say, yes, you're risking to lose not $7 but $10. But in between that $7 and $10 is a period where you want to stay in because the potential upside is there and you want to be participating in that. And that's how stop loss is more than just more than just an absolute figure. You need to start understanding the charts. And those of you who are less comfortable, obviously, with the charts, with the support lines, the resistance lines, etc., you must reach out to me or to your account manager to get yourself more familiar with that. Obviously, you must get comfortable with that because I promise you, you'll start to see the benefit from it and the payoffs from it very, very quickly. It all ties into the risk management, obviously. It all ties into risk management, but it's just getting you that bit smarter about your risk management and your money management. Okay. Now, on the flip side, and again, stop me if I'm going too quick for you guys. I just want to make sure I cover as much as possible to help the trading going forward. On the flip side to not understanding the charts enough, so your stop losses and your take profits might not be at the right levels, there are people who unfortunately also, of course, even professionals, they might have a chart up here. You can see I'm looking at US dollar Swiss franc, and And they might have so many technical indicators open, actually, that it gets too confusing. You know, they might have the average, the moving average. They then might have the Bollinger Bands. They might have the parabolic. You know, they might have MACD as well. I'm not going to go into what these are. That's for a different webinar and a different time. But you can see, as you start to add more and more lines on the chart, on the actual price chart in particular, it starts to get a bit confusing sometimes. You know, my advice is usually to have a look at 2 or 3, get really, really comfortable with 2 or 3 indicators. Get really, really comfortable with 2 or 3 indicators. Really implement those into every chart you look at. Find ones that you feel work for you and ones that you understand. And don't overdo it on the screens, because it can get, as you can see, sometimes for those of you who aren't, you know, looking at screens 24/7, if you have something like this open, it could confuse you further. So on the one hand, you need to have a decent level of understanding so that your trading obviously takes advantage of it, especially when you look at protecting yourself on the downside, on the stop losses and on the take profits. On the flip side, using too many indicators can also be to your detriment as well. Okay, and for those of you, again, I always say reach out directly if this is something, you know, you don't feel comfortable with. Reach out to me or your account manager, and I'm sure anyone will be happy to take you through the steps that we need. Okay. Sticking to the theme of indicators is something I see day in, day out. It's going against the trend. Now, the old cliche is the trend is your friend. I'm sure a lot of you on the line have heard that. Now, there are people whose strategy is to find the part of the trend where it's about to pivot, and they call them something like contrarians, whatever it is, but they find that. But for those of you who are newer to trading and who aren't using as sophisticated, so to speak, who aren't using as sophisticated methods, you know, if we look at the dollar, and again, when you talk about scalping and in and out, that's one thing. But if you look at the dollar, almost since the election, but particularly over the last couple of weeks, you can see the trend is really, really, really in favor of the dollar. Okay, we know that already. We know the dollar is very strong. And what people sometimes do is they sell the dollar thinking, oh, well, it's going to end. It's got to break. The dollar goes lower. They then say, oh, well, I'm just going to keep selling the dollar because it's gone lower. It's even better entry point. It goes lower again. They keep selling. They keep selling. They keep selling the dollar until, like I said, that money management, if that's your strategy, that's one thing. But if you don't have the capital to do that and the dollar gets stronger and you keep opening trades against the dollar whilst the trend is very much in favor of the dollar, you're running a massive risk. And again, that's where you're taking on undue risks without even realizing it. You know, you just think you're opening more position against the dollar, but you don't think about, you need to think of your portfolio laterally. You need to think of your portfolio from the very top. You need to sort of imagine yourself hovering above your entire portfolio, all the positions, so you can see each level of risk, where you're exposing yourself. And this strategy, going against the trend, can sometimes be really, really difficult. And obviously the payoff can be good if you get it right, and it sometimes might take a long term. But you need to be well capitalized, because if you're going to bed at night with 50% margin level, you know, you're going to be nervous about what's going to happen to the dollar overnight. However, if you've got the conviction that the dollar is due a correction sometime soon, it could be for a variety of reasons, Donald Trump, geopolitical events, whatever, you name it, that's fine, potentially. And if you've got 100% margin level and you're really exposed to the dollar, but you've got loads of security in the account, you can go to bed at night almost feeling a lot better, because you have that margin to withstand the volatility that we know volatility happens in the markets we're dealing with. That's why we trade them, but you need to be able to withstand that. And right now, things are particularly volatile, especially the last few months. You know, volatility's increased in the foreign exchange markets. Me personally, I think 2017 we will even see an increase in volatility. Without digressing too much, if you think of the events due in 2017, the expected events, that is, the elections all across the major countries in Europe, the continued discontent of sort of the average person on the street with politicians, with democracies that they're living in, with the government, it bodes ill for volatility almost. And those are just the expected events. Top that off with the Donald Trump inauguration, January the 20th. How will his first 100 days look in the job? We don't know. So to be well securitized in the account cannot hurt, okay? A couple more topics I want to copy. We've talked about getting comfortable with the technicals, but you also need to be on top of the fundamentals. Even if you're a technical trader, I can promise you those on the line who are, very, very strong in technical trading are nonetheless on top of the headlines at the very least, and most importantly on top of the calendar. When are these economic data releases happening? You need to be on top of that. Now, we have the calendar here on our Tradio website. You can find it elsewhere all over the internet, that's not a problem. But you can see the time, the countries, the level of importance. So for those who this is new for, I want you to sort of only pay attention to the very, very important things and see how those have an effect on the currency. Sometimes they do, sometimes they don't. But if you're not aware, for example, that tomorrow in the UK and in the US they're announcing Q3 GDP data, quarter on quarter, year on year, and you're suddenly trading, you see spikes and you're not sure why, you're not going to be positioned correctly. You're not going to be in the right trade, most likely. And if it does get volatile, like I said, you won't be capitalized enough if you don't know when the expected events are happening. So it's very, very important, even if you believe yourself to be a purely technical trader, you need to know at least what major events coming out, economic releases, press conferences, you name it. I want you all to get comfortable with that. And it's a great way to prepare for your trading, either for the week ahead, for the day ahead, late in the evening, you're just quickly browsing, check what's coming out the next day, make a note of it. Check what's coming out on a Sunday, what we're doing the next week. And like I said at the beginning, next week, obviously, because of the holidays, it's very, very quiet week. But tomorrow, the 22nd and 23rd of December, there's still, UK and US, if I can find it here. You'll see, 23rd of December. Shareholder events. Okay, it's still loading. But my point is, often or not, there's important data, including tomorrow, including what we had today, and including Friday. And if you're not aware of that, you, one, might be missing out on opportunities, but two, if you are trading, you're more than likely not to be positioned correctly and not to be well capitalized and to be taking on too much risk without even realizing it. That's the worst part about it, without even realizing. Okay, so far we've talked about risk management and money management, using too big of a lot size relative to the size of the account, or your account size simply not being big enough for the amount you want to profit from and the amount you want to trade. Having more margin in the account is always the best way forward, not so that you can open up more trades, but purely so you can withstand any volatility. Stop losses, take profits, using those imperative. Understanding where to put your stop losses, also imperative. Using the charts, and again, if that's something you're not so comfortable with, reach out to me. I'll give you my details at the end, or reach out to your account manager, not a problem. We also said using too many indicators, technical indicators at once, can be quite confusing. And going against the trend, if that's your strategy, then great. But if it's not, and you just fancy doing it one time, it's more than likely going to end up hurting you, especially when we talk about the risk management before. From a fundamental point of view, we talked about the economic calendar, making sure you know what's coming up. It's so laden with news, trying to navigate it all can be difficult. But using the calendar, using the resources at your disposal, you can find the stuff that's important to you in your trades, and you can decide what to do about that. And last but not least, something perhaps the most important next to risk management, it's quite simply the fact that we are all human beings, we are all emotional animals, so to speak, making irrational decisions a lot of the time, unfortunately we have to admit, and how that affects your trading. So when I was at Barclays Private Bank, we actually spent a lot of money building out what they call the behavioral finance team. They brought in a lot of guys who had studied psychology and things like that, not necessarily in finance, and they integrated them to really get an understanding of a trader's mindset. you know, the effect that our emotions and our often irrationality can have on our trading. The simple fact that it's so difficult for us to cut losses is just one example of why that's very, very difficult. You know, it hurts sometimes to cut losses, but you mustn't go against the fact that if every single other signal and direction is telling you to get out the trade, then just get out the trade. Save yourself money. Save yourself the losses, even if it's a certain loss. And I know it can be difficult. And I know it's easier said than done. That's what I'm talking about earlier. I know it is. But it takes time to work on it. But you need to have that in your mind when you are trading in the financial markets. You need to be prepared to cut losses. You need to be prepared also to take profits. How many times do people let profits run and run and run? And on the flip side, how many times do people so quickly see their trade go into profit and they just take the profit without understanding whether they should actually be hoping for a bigger payoff? Okay, so that emotional side of us, it is hard to mitigate. That's why we work with you. You know, having someone who works with you on the account, so they can almost be another voice on your account to sort of hopefully let you see through the mist. That's what we aim to do. But we've all been there. We've all done that. Even the traders who are aware of this, it still can be very difficult sometimes. But the fact that you will be aware of it at least already puts you a step ahead than a lot of other people. People don't even realize they trade, and they don't sit back to think, you know, why am I making this decision? What are the reasons for it? Etc. Okay. So let's see if there's any questions on the line. Hold on. Bear with me. Questions. No, nothing at the moment. Okay. I know it's been quite a quick speed, but we have talked, you know, about 8 or 9 common mistakes. For those of you who have been listening closely, I promise you, if you pay attention to what we've been talking about today, you also heed my sort of calls to try and mitigate those. So simple things like trading smaller lot sizes relative to the size of your account, if you aren't doing that already. Simple things like making sure your margin level is somewhere above 1,000% at all times. You know, those things are not difficult to do necessarily. I agree, some of the things are more difficult. You know, the emotional aspects we talked about, learning where to put your stop losses. Those things require a bit more time, a bit more patience. Not to say they can't be achieved, but you can start right now. From this minute, you can start to get out of some bad habits, and you'll see the results very, very quickly. If not just in profit, in the fact that you'll find yourself, you know, making smarter decisions, becoming a wiser trader. For that, I promise you'll see from day one. The things that need to work on can be worked on. That's not a problem. You mustn't lose hope, even if you've made these mistakes before, because we've all made them before. I promise you, everyone on the line has made at least a few of these common mistakes before. So don't beat yourself up. That's another thing. And that's where that emotional side of thing comes in. You know, you've just had a loss. You're either thinking, oh, you know what, I'm going to go make that back. And you suddenly go put on one stupidly large trade, and that's it. You potentially get wiped out because you just wanted to go win back your money. No, that's what they do in the casinos. Here we're trading smartly, skillfully, and on the financial markets, it requires a bit more skill, for sure. Okay? But the risk management, money management intertwined are very, very important, okay? And I want all my clients and all you on the line to, you know, our aim here is to quite simply make you better traders, in short. And that's what we try and do. Each day, each time we speak to you on the webinar or one-to-one, that's what we try and do, okay? In terms of the markets, look, it's Christmas on Sunday. It's Christmas on Sunday, New Year's after, so no doubt about it. Next week will be a very, very low volume trading week. Markets are open, not on Monday really, and again, you'll see on the screen here, we've notified you some changes on the trading hours. If you click on it, you'll get it. But you can also use Google. Hopefully you've got the email. Please pay attention to that, okay? If you can't find it, let me know, because hours will be changing. But as for this week, tomorrow and Friday, we have important data coming out of the UK and the US in particular. GDP data, the most important, probably for me, the most important economic figure which comes out to signify how a country's sort of currency is doing, is coming out tomorrow. So maybe they're teasing us a few days before Christmas, but we've still got to be glued to our screens. We've got to, like I said, start instituting the things I've already discussed, okay? For those of you who want to discuss things with me directly, Sean, S-E-A-N, @Tradio.com, or reach out to your account manager. And again, for those of you, I always want to leave you with something sweet. So something you may not have heard about is our newly instituted Diamond account, okay? I'm not going to go into details, but it is one of the most competitive, if not the competitive spread you'll find on the market. And from a money management point of view, it allows you to, manage your risk, become more profitable. It can economize your account without even realizing it. So if you want to discuss that, do that with me. Subscribe to our YouTube channel, Facebook, leave comments, likes, you name it. I want to see you all doing something on there. It's a pleasure spending time with you. Thanks for dialing in. Let me take this opportunity to wish you all and your families a very, very Merry Christmas for those of you who are celebrating it. A Happy New Year, a healthy New Year, successful New Year, one that will sort of fulfill everything you're after. Be careful when you make those New Year's resolutions. It's something you can achieve. And yeah, thanks for dialing in. Merry Christmas, everybody, and speak to you next time. Take care.